Well, the World Bank has slashed its China growth outlook for 2022 and 2023, citing weakness from the country's long COVID-19 measures and its shrinking property sector. The new forecast, 2.7% growth in 2022, 4.3% growth in 2023, well below its September estimates and below the official target from China of around 5.5%. So this happening, of course, amidst the changing picture for COVID in the country, as China is now changing its definition of what it attributes to COVID deaths directly. So basically, China is now saying it's only counting deaths as being as a result of COVID if it's a direct result, not if the person has COVID and then experiences complications, but direct respiratory effects. So just a lot going on there between that and trying to game out what it means economically.
Yeah, and economically, with what we've heard from the World Bank, and I mean, China has already kind of vowed to really look at its economy and try to figure out any type of stimulus efforts that it can roll out to stabilize the economy. And even today, they had set their benchmark lending interest rates. They actually kept this unchanged. That's the fourth month in a row that they've done that. And that keeps with some of the forecasts that were expected. But that's remaining at 3.65% for their 1-year loan prime rate, and then the 5-year 4.30%. And so with that in mind, they're trying to continue to be more stimulative at a time where they know that the COVID scenario and the reality of the zero tolerance policy and now a reopening that they're trying to effort and move forward with could have even more detrimental risks economically, and trying to offset that too.
Yeah, and I think you're learning that this situation, COVID, the reopening, the policies of the government, it's not going away next year. There was, I think, a view at some point things would start to get better and there would be a pivot in the economy next year. And I look at this new report put out by the Japan Center for Economic Research this week, totally flying under the radar. They're saying that China won't surpass America's in size by 2035 after all. This paper is calling for their economists. They're looking for China GDP growth rate will fall to the 2% range in the 2030s, in large part because of what is happening today on the ground in China.
Wow, that's amazing. I mean, certainly it seems clear that the sort of throwing the doors open, reopening in the short term, it seems like it's going to happen much more in fits and starts than just sort of that reopening and everything's
2% growth for China's economy. This is not what many people were banking on 3 years ago.
To be fair, like, who knows what's going to happen in the
data
2030s? I mean, like...
Well, I do. You do too. Brad, so do you.
Nah, I mean, that's...
Okay.
That forecast that far out,
yeah.
I don't know how much
We'll be here to report it when it hits 1.5%.
Yes, we will be here.